Steve Leisman of CNBC just absolutely lost it on Donald Trump. Let's play the clip and break down some of the comments that he's making. And what I want you to pay attention to is watch his co-anchor try to settle him down and pull him back, like find an excuse as to maybe why this is strategic. I think CNBC is starting to realize, uh-oh, he's going off the deep end. Quick, rein him in. Listen to it.
I'm going to say this at risk of my job, Kelly, but what President Trump is doing is insane. It is absolutely insane. It is about the 8th reason we've had for the tariffs, and now he's saying he's putting 50% tariffs on Canada unless they agree to become the 51st state. That is insane. There is just no other way of describing it. And the trouble, Kelly, is that it shows there are no bounds around President Trump. This is very different from the first administration, where there were people around him who seemed to, I don't know what the word is, but smooth over some of the edges now. And the other thing that's not talked about, Kelly, is what's going on within the administration in terms of how they're treating the Constitution and laws. I think all of that is bad for the attraction of capital. And the gentleman from Bridgewater is 100% right. We need massive amounts of capital if we want to fund our deficits, pay for the things we want to pay for, sell our bonds, and have high stock prices. And it seems as if this administration is doing everything it can to chase foreign capital away.
Keep in mind, a lot of the promised investments that were getting announced from foreign companies like TSMC or even American companies like Apple are promised investments over the next 4 to 5 years, whether it's the OpenAI project in partnership with Qualcomm, whether it's TSMC, whether it's Apple, Microsoft, doesn't matter. A lot of these announced projects aren't actually money here yet. And so I think Steve is arguing, hey, you know, people might say right now that they're going to invest, but could we scare them away if we end up creating too volatile of a situation in the near term? You know, other people say Donald Trump is too sort of in cahoots with the Supreme Court, which potentially could also lead other people not to want to invest in those are rumors. You know, everybody's going to have different opinions on that. Some people believe that, some not. But listen to the rest of this interview, and we'll add some more color there as well.
Well, and we could go into the strategy of the insanity as a strategy in terms of our trading
Insanity is not a strategy. I'm sorry. I'm with you, Kelly, in trying to look for silver linings. I'm a sunny person.
Not silver linings, tactics, right?
Some explanation for this other than insanity. I'm ready to accept it if you can come up with one.
That right there was sort of the moment of the producers, hey, rein him in. and you can see Steve doubles down on, I'm looking for a silver lining. I don't see it with tariffs. Keep in mind, tariffs, they're a negative, okay? They are an extra cost. They're an extra tax. They're not great. Economically, nobody wants tariffs, but they're seen as a bargaining chip at the moment. We're going through the bargaining apparently now. What damage will it cause? We'll see. Let's listen in more.
Is the Fed put there, and will they at some point react?
I was just on the phone with my producer, Betsy. We were trying to create something because I want to show you something special, something interesting here, which is if you look at May, it's at 46%. Then it jumps to June being 90% for that first cut. Why the gap? I think the gap exists because the market believes that the Fed has to see the initial round of numbers from tariffs come into the system, and then hopefully by June it can discern that there is not going to be a wider inflation threat. So you don't put the cut into May because you have to see those tariff numbers pass through. I don't know if we have further numbers, but I can show you the second cut looks like it's July at 63% probability, and then you get to October 63, December 73% for the third cut. So there's 3 cuts built in this year, but I think they're contingent upon the idea of those tariffs. They come in and pass through the system as just a one-time rise in prices.
This is probably a good point. We only have about a 4% chance of a rate cut on March 19th, which is the Fed meeting that will be next week. We'll be covering that, of course. And then you've got about a 46% chance. Now, this has been updating even just over the last 20 minutes here, but a 46% chance now set for May 7th, 76% chance set for June. So that gap that Steve is referring to here is this idea of, hey, will we have some color on tariffs and a solution here? Did inflation pass through or not? We got CPI coming out tomorrow. Too early to say that there'll be much of a difference there. You know, I was reading the Best Buy earnings call this morning, and Best Buy makes this argument that, hey, look, we think sales are going to grow between 0 and 2% comp sales without tariffs. Now that's really interesting. I haven't actually seen a company guide without tariffs. Like most companies like Kohl's are like, yeah, we're just going to try to incorporate everything we can and we're going to give you bad numbers. Best Buy's like, we should grow at 0 to 2% unless tariffs cause problems. Then they're asked like, hey, are you going to be able to pass those prices on to consumers? And their response is a very common response we're seeing right now, which is, well, maybe, but we don't know how consumers are going to react. See, when you're only growing sales at a midpoint of 1%, you don't really have the capacity for large price increases. So sure, you could increase prices 0.5%, but if your costs went up 5%, you're eating 4.5%, and that hurts your earnings. Anyway, let's keep listening.
The slowdown is really,
right.
3 cuts is a big change.
And 3 cuts is a big change, and I think you also probably have to see at least some measurable weakness in either jobs or in the GDP numbers. Not what we're seeing now in Atlanta Fed, because that's all driven by artificial trade stuff.
Exactly, and gold imports, which
right. There's no, and I want to be clear about something right now, which is recession is not in the hard numbers, okay? It's in the soft numbers. And the fear right now is that what's happening with tariffs and what's happening with sentiment will come into the hard numbers, but there is no inevitability of a recession at this moment.
And that, Mike, I'll
I think it gets to Mike's point.
Leave it. You don't have recession in your forecast, do you?
I also agree with Steve here that recession isn't in the numbers right now, but we're trending in that direction. We're trending towards a slowing. Can we pull it off as a soft landing? Hopefully. Are we going to? That's the big question. Depends on how volatile and damaging things are now. See, in my opinion, recessions don't occur very slowly. You typically set the groundwork for a recession, and then there's a shock event. The shock event must then immediately be buffered by either the Fed put or a presidential put like the Trump put. And if it's not because the Fed isn't ready to cut, then you suffer the recession.
So do you?
It's not the base case, but I think the risks are obviously rising with these policy shocks. And look, we're talking about the Fed and the timing of cuts. Is the Fed going to get super lucky again with the timing being just right and the cuts being sufficient to preserve the business cycle? And, certainly I think we all hope so. But we're taking a big risk here. And in terms of the hard data, Steve's exactly right. There's no recession in the hard data at this point. But I will submit, the tracking estimates for private sector final sales for the first quarter are below 1% now. Now, maybe that could change because, we don't have a full set of data. But if nominally we're running the private sector final sales around 3 or just above 3, and the Fed funds rate is at 4.33, you could make the argument here that, that the Fed might be falling a bit behind the curve again. So, we'll see. I think you can't discount the risk that a recession could occur, even if it's not the base case.
All right, gentlemen, thank you. Appreciate it. Michael Darda, Steve Leisman.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.